What caught your attention?
You know, it's the price data that catches my attention. But let's run through the numbers. As you mentioned, retail sales on a headline basis rose, but the core, which goes into GDP, did not. It was flat on the month, and the month prior was revised lower. So that has poor implications for third quarter GDP at this point. Now, all of this is being framed by the Federal Reserve and what they're going to do in reaction to all this. And I take you back to Jay Powell at Jackson Hole, who said, our decision at the September meeting will depend on the totality of the incoming data and the evolving outlook. So what's the totality of the data? Well, jobless claims, Tom, you were excited by this. They're at 213,000. That's the lowest since May. They've been going down, suggests strength in the labor market.
Right.
Empire Manufacturing, minus 1.5, but look where it was the month before. A big gain there. Philadelphia Fed does fall, but now those two indexes reported big drops in prices paid, and that probably matters more to the Fed. Import prices fall, and then the stuff that matters. This is the data that the Fed is going to be watching. This is what we're going to care about. Retail sales flat, as I mentioned. That's semi-positive because it does suggest maybe things are slowing, and that's the Fed's job. Payrolls were positive, but does that mean a jump in wages and salaries? I mean, that was the question raised by jobless claims. Earnings were up 5.2%, so that was a negative. CPI, 60%. Of the categories are over 4% at an annual rate, so that's negative. Financial conditions are looser, so that's negative. Add it all up, and maybe you make the case for 75. Does it make a case for 1%? That's much harder to make, I think.